Today we will discuss about a very important accounting concept, that is revenue recognition concept. This is one of the most important concepts which we needed most while we prepare the books of the accounts. So let's have an in-depth analysis about what is revenue recognition concept. The word itself says that revenue recognition. So what does it mean? What do we mean by the revenue? Revenue means income. When the revenue is recognized, that is all about this concept. So first of all, we have to know that the revenue depends upon sales. That means sales generating revenue for the business. And it's an income also. So sales may be two types: cash sale, credit sale. So when we say the word sales, be sure that it is including the both, not only cash sale, credit sales. So cash sales means it is getting the cash at the time of sales. Credit sale means not receiving cash at the time of the sales, and the cash is being received on a future date. That's all about. So let's have an example to understand this concept in a more better way. For example, sale took place on 1st of the January 2020, and that is credit sale, right? And the amount received on 10th of the February. So on the 1st of the January, there is a credit sale in the business, and the amount of that sales was received exactly 40 days later on, which is 10th of the February. So now question comes, when we will record this transaction in the books, in which date we will recognize income? On the day of sale or on the day of receiving the cash? That is one of the most important question. It seems that a lot of students makes blunder right here. We need to have a clear concept about this. Okay, so we must remember the income is recognized as well as recorded in the books, not when the cash is received. Income is recognized only when sales are made. So the day of the income is 1st of January. Although the cash is not receiving on that day, the cash is receiving on a later date, because the income does not depend upon whether the cash is received or not. Be sure of that. And that is coming according to this concept. So what this concept saying, that income is allowed to recognize and recorded in the books at the time of sales, on the day of sales, no matter whether the cash is received or not. It does not depend upon the recipient of the cash in the business. And we have to follow this principle while we prepare the books of the accounts. For example, I'm just considering one more thing. Profit. We know at first in business, the sales take place, sales generating income, and income from income, the profit generates, right? So when we write the word profit, be sure that the profit is already earned in the business. Profit is never recorded and recognized before the profit is earned. So there is no concept, something just like that, future profit in the business. When the profit is there, be sure of that it is written only after profit is being earned in the business. And why we are following this concept? Why we are following all these things? Because of the revenue recognition concept. This concept says that, yes, income is recognized at the time of sales, not when the cash is received, and profit is recorded only after profit is earned, not before that. That's all about the revenue recognition concept.